Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at how you can prepare in advance for potential trade setups with a great example yesterday on the NQ. But as usual, we start with our risk disclaimer and just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put it another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. It doesn't matter what trading approach you take, there always will be losing trades. Right, let's have a look at the 3-minute NQ from yesterday. And in particular, I want to look at this VS sell that caught the high yesterday. This is a 24-hour chart of the NQ on a 3-minute time basis. So, for those of you who are new to MTPredictor, I just want to remind you that we're not a black box system. We don't look to take all our trades, perhaps in the direction of our MTP trend colour. The reason we don't do that is because we know and understand that markets are random at least half the time. So half the time or slightly more, the markets are not in a pattern where you can get a clear idea of the large degree trend, and therefore you can't get a clear idea of trade setups to take. So we only like to trade when the picture's clear. So how do we do this? Well, how we do it is partly what I want to talk about today. In other words, how you prepare in advance for potential trade setups. So rather than having, say, like a market analyzer going, you can have a market analyzer running. Obviously, there's no trade setups here because I'm recording this when the market's closed. But you can have a market analyzer running that will give you alerts to trade setups. But that's in reaction mode. In other words, you don't really want to suddenly have the market or a analyzer beep at you, then suddenly you have to scramble around trying to figure out what chart or what market or what time frame it's on. Ideally, you want to be preparing in advance. In other words, you want to be anticipating when trades could potentially unfold. And for this, we go to the higher time frame chart. So on a 3-minute chart, we'd go out to the 15-minute chart. If you're, say, trading a daily chart, you go out to the weekly. Say maybe you're trading Forex on, say, a 4-hourly chart, you'd perhaps go out to the 8-hour or the daily. Just going to zoom this out a bit. Whoops, a bit too far there. Just going to put a little bit of white space on the right-hand side just to give us a little bit of chance to drag the chart over a bit. Whoops. There we go. Right, what I'm going to do is I'm going to drag the chart back in time. So I'm just going to drag the chart back in time here. And what we do is we place our DPs or decision point levels on the chart. So I just want to show you this with a couple of examples from yesterday. So here we use the last major pivot low here. So I hover the mouse over here, I right mouse click, I do decision point. Can you see how that gives you an area of support? It's support because it's below the market, but more important, it's on the chart in advance. It's before the market gets there. So if I now scroll the chart along, let's see what happens. Do you see how the market went down to that level? Then that actually gave us a low of which the market bounced. So in other words, you're prepared in advance for that particular low. So let's see what happens as the market is starting to bounce up off here. As it's bouncing up, we want an area of potential resistance. So we want to anticipate where this rally may, I won't say will, I'll say may end. For this, we use the last swing into that low. So we right mouse click off this pivot here, and we again do the same. We do decision point. Again, can you see how that's on the chart in advance? So it's preparing you in advance. In other words, it's getting you ready. Let's see what the market did. If I drag it across, can you see how the market went up to that level? That nailed the high of the day before the market started to decline. So let's have a look at seeing what that would have looked like on the 3-minute chart. So if I change time frames, let's just scroll back again. I'll just zoom in a bit more. I'll just take that white space off the right hand side so we can get a bit more space on the chart to see what we're doing. But let's just drag this across a bit there. So if we look at this, can you see what that looks like on the 3-minute chart if you're following that? Can you see there it is? It's on the chart in advance. It's there before the market gets there. So you can be ready to see what happens if, not when, but if the market gets to that level. If I drag it across, can you see what happened? The market actually went up to that higher time frame resistance. It then made a VS sell or volume spike sell on that particular time frame. In other words, we were anticipating where potential reversal was happening off the higher time frame chart, and that's exactly what happened on the lower time frame. So let's see the result of this trade. So if I right mouse click over the red cell bar, do analyze trade setup, this would have been the target at the time. And as you can see, the market did decline nicely for the rest of the day, reached the target just before the standard close of the US session, where a profit of approximately 7.3 or just over 7 times the initial risk was available. This was trading 2% of a sample $20,000 account. Remember, this then allows us to calculate the number of contracts to trade for this initial risk. So in other words, risking 2% of a sample $20,000 account. So if you're wrong, and you will be wrong, as I said in the risk disclaimer at the start, losses can and will and do unfold. The loss would have only been 1 R or 1 risk unit. And this is what we're looking for with MTPredictor. We're looking for profits that are large, not just in dollars, but in relation to the initial risk. So for example, if I had a smaller account, say a 10K account, that would mean only going short 2 contracts, but again for the same as minus 1 R risk. Down at the target, the profit would be just over 7 times the initial risk or 7 times the loss when this comes through. So that's the key to using position sizing. It keeps the initial risk or losses small, and you're looking to run your profits and have profits large in relation to the initial risks. So this is why this trade set up here. Can you see this history triangle? There's a history triangle here. So if I right mouse click over this red cell bar, you can still place the analysis on here. This is why this TS1 cell would not have been a good one to take, because it was coming off this 15-minute support. Remember, we put that 15-minute support on that nailed the low. It was rallying up into this 15-minute resistance. Therefore, the large degree trend was up. Our MTP trend was also blue at the time. But can you see how it was going up? So therefore, you wouldn't be considering that sell. If I clear everything off, as the market is declining here, you wouldn't be considering these potential buys, because again, the market is coming down off this resistance zone. Also, our MTP trend was red as well. But can you see how this would have anticipated or prepared you in advance for a potential area where a setup may unfold? So in other words, you're looking to be ready in advance. So when the setup comes in, it's quite easy then to place the analysis on and get into a trade. Speaking of that, if you're using our Pro version, we have our trade module here that allows you to place the trades really quickly. So when this actually came up, so as soon as that bar closed, you then literally just right mouse click, analyze trade setup, do trade, then do OK to place the trade. So in other words, that would have then placed a trade to sell the 4 contracts at that level. So as you can see, it would be really quick and really easy to be able to get into a trade once the setup is there on the chart. So hopefully this has been a good video to show you how to prepare in advance for potential trade setups. This is using our add-ons for NinjaTrader 8, but we also have the same setups in our standalone version and also our add-ons for TradingView. And if I just pull that in for a second, if I just pull in the TradingView chart, just maximize that NQ up. Whoops, sorry, I didn't mean to do it quite like that. Went a bit bigger than the video. So if I just make it the size there, and if you look at the NQ chart, there's the same VS cell there on our TradingView add-ons. There you go. Catches that high, exactly the same as our NinjaTrader add-ons, and it would have been exactly the same in our standalone version as well. So whether you're using NinjaTrader 8, as we have here, or whether you're using our standalone version, or whether you're using our TradingView version, you can do exactly the same. In other words, what we can do, so we just clear that all off. Remember how we went to the higher time frame chart. Just clear those all off. We then put our DP on the chart in advance. Do you remember that was on the chart, it was missed? That was on the chart in advance before the market even got there. So this level was there waiting for you before the market got there. Then when you were on the time frame you were actually trading, you were then ready and waiting to see whether a trade setup unfolds at that particular resistance. Obviously trade setups after this, if there had been like a TS3 sell in and around here somewhere, perhaps the market had gone down an ABC correction, that would have been still valid as well, because the market would have made a reversal off the higher time frame resistance. The market trend would have then come down. So in other words, the DPs on the higher time frame chart allow you to anticipate potential support and resistance zones in advance. That also is what deems the picture to be clear. In other words, that's when we want to try and be looking for our trade setups. If the market is not making reversals of DPs or the picture is not clear on the higher time frame, we then deem that the picture is not clear, and then we either wait till the market becomes clear or we look to another market in time frame. So in other words, the DPs on the higher time frame charts have several uses to allow you to gauge whether the large degree picture is clear, and also to anticipate in advance, which is the purpose of this video, potential areas where support and resistance can come in, and also allow you to then be able to uncover trade setups. And as you can see, that allowed you to catch this VS sell here that nailed the high of the day on the NQ yesterday, that then had a lovely trade for a potential 7R, just over 7R profit as the market declined for the rest of the day.